Welcome to this video day. It's Sunday, 2nd of July. What we're going to be doing is looking at what we consider to be some high probability chart setups. They're all contrary trades against the prevailing market sentiment. In our view, these trades offer between 300 and 1,000 pips in profit potential. Now, all trades are basically influenced by our reading of our favourite tool in Forex trading, the COT, the Commitment of Traders Report. Now, if you don't know what it is, I've done an explanatory video beneath this one. It's essential. In our view, we use it in near enough all of our trades. We will consult the COT because it's going to give us clues to where the chart may go, and we'll keep our charting very simple as well. And when we come to the charts, you'll see how simple the charting is. But the COT is based on timeless logic, and it'll get the odds on your side. It's really just helping you see bullish and bearish extremes so you can look for a turning point with your technicals. Now, in terms of charts we're going to be looking at, we're going to look at GBP NZD, NZD USD, NZD JPY and USD JPY. Now I'm going to start with GBP NZD. Now I did do a video on this on Thursday. Doing another one today because the latest COT report is making me just extremely bullish of this pair, or more bullish. So let's just have a look at GBP NZD first, then the rest of the charts. Then I'll be back with a few points to sum up. We're on the GBP New Zealand daily chart. We've actually done two previous videos on this one when we were looking for our long entry, and I did one on Thursday when we were sitting on this candle here. The reason I'm doing another video today is because we've just had the CFTC net traders positions out on Friday, and they're making me even more bullish of the British pound, and I'll explain why. Now, in terms of CFTC net traders, just for new viewers, there's no CFTC net traders positions for crosses. You have to work them out yourself. So that's just what I've done here. Very simply, I've got the non-commercials and worked out shorts over longs, and they're 4.2 to 1 in terms of shorts over longs. On the other side, smart money commercials, 6.7 to 1 in terms of longs over shorts. The divergence between the groups is 10.9. Now, when I looked at the report last week, the divergence was only just around 3. Okay, so the divergence has tripled up. Commercials have really piled in to longs, and that's what's making me, very, very bullish. It's reinforcing the bullish view that I've got of this pair, and I think it's going to run 1,000 pips, and I'm just going to explain why. Now, for new viewers, we like to use the ADX if we can. We don't get many signals with it. Put the ADX down the bottom. One of the simplest indicators to use, but it's very effective. Okay, all you wait is a single line. You wait for it to go above 40 and turn down, and that will signal or give a warning that the prevailing trend, either up or down, is coming to an end. Now, this trend was obviously up, sideways consolidation. There's the ADX candle, bang to the downside. Also, when we were up here, we did have heavy commercial selling, specs heavily long. So speculators got flushed out and stopped. Commercials basically called the turn. They're calling for the turn down here as well. Now, we did note that when we had the ADX above 40, it's obviously turned down now. But before it turned down, we noted this as support. And we said you could probably anticipate, or we could anticipate, the ADX turning up. And the ADX effectively, we thought it would turn up on any blue candle. So we came in through, I think it was 75.30, nice big blue candle up. The turn down occurs, bang into the 20-day moving average. Then we get above it. That's when we did the last video. We're saying, any dip to the 20-day moving average should hold. This one's holding, okay? We've got some support now, just there. I know it's a red candle, but we've poked down to test the 20-day moving average, and now we're sitting back above it. Now, obviously we've come in at a really good level because, we're aggressive with the entry, and we've moved up, around, about, 280 pips, something like that. Doesn't matter if you've missed part of the move. This trade has got far further to run. So my own view is if this high is taken out next week, we should move on up to the upside. In terms of stop protection, I've said it before, don't put your stop too close. You want to be well back from the 20-day moving average and the next level of support, which is here, okay? Okay, so there's a few candles, that body, that body, that body, that body, that body. You've got 20, that level of support. Stick your stop back here. Basically, she runs through here. First level of resistance, I said, I think will be 80, 182. Okay, so that's a good profit if we get up there. But yeah, like I said in the last video, we're going all the way back up to here in our view, back up to 188. So from here, we're just around just below 178. If we get up here, then that basically is going to be near enough 1,000 pips. And in terms of this setup, yeah, obviously the ADX gets us the entry. Now we've got the CFTCs backing this up. We know the Kiwi, and you'll see it in a moment because we'll do a few more Kiwi pairs. Kiwi's just so overbought. Pounds so oversold. This is in terms of the fundamentals that or how we see them. Yeah, so you got the very overbought Kiwi, very oversold GBP. Commercials are basically reinforcing our view. They agree with us, or we agree with them. Far higher prices to come. Doesn't matter that you missed a little bit of the move. There should be plenty more on the upside. And let's move to another nice looking setup, again with the NZD. We're going to do NZD USD next. On the chart of New Zealand dollar against US dollar, before I use my usual charts, I just want to show the CFTC net traders positions graphically. And this chart from COT base. And I think, yeah, for beginners in particular, it's a good idea, yeah, to look at the positions graphically because you get a little bit of confidence in the net traders position. So we've got really big divergence on this chart over here. Now what we're interested in is commercials, obviously, v large speculators, which are non-commercials. Small speculators in the blue are totally irrelevant. Before I come to the latest setup, I just want to go through how the commercials have been moving in this pair. And we'll start at the left with this price peak here in full. Notice speculators build up longs, commercials short, works nicely for them. Then they go even. Speculators build up longs into this price peak, nice big fall down. And of course, the commercials are short. The commercials then go long into this bottom here. Nice move up. Look, speculators are caught short. Then on this one, speculators are long into this peak. Commercials are short. Nice move down. Speculators are very short into this bottom. Look at the commercials, really long. Nice move up. Then the groups cross over. Speculators again caught long at the high. Commercials are short. Then we have the commercials build up longs into here. Goes up a bit, goes up a bit, then it comes down a bit. The commercials then start to aggressively get rid of their long position. Look how short they are now. Look how long the large speculators are. So we've got a nice rise up, and these groups pose each other, and it's a wide opposite, if that makes sense. You see here, this one's a bit smaller, this one's smaller, this one's smaller, this one's smaller, this one's smaller, that one's smaller. So this one's a really big divergence, biggest on the chart, and it's probably the biggest, I think, in about 2 or 3 years. I think it's 3 years actually, but that points, this price rise could be on borrowed time, and prices are going to break in favour of the commercials. And when we look at the chart and I'm drawing the levels, you'll see why I'm so bearish of this pair. The New Zealand dollar US dollar daily chart again. This time I've put up the ADX on the chart. Now the COT divergence is making us extremely bearish of this pair, and basically the ADX reinforces that view. Now in terms of the ADX on the left here, you can see an ADX turned down from above 40. There's the candle. That is indicating a change against the prevailing trend, which is obviously up. Then we get a nice move down, okay, from 73 to 69, so 400 pips. Now we've got another ADX potential turn down coming, just turning flat at around 50. Got a nice strong uptrend. We're looking for a sharp move down. In the last video we said we were looking for a move through the 20-day. That 20-day moving average, that hasn't occurred yet. Obviously, we've snaked a little bit higher, so about 80 pips higher since we did the last video. Now, in terms of resistance on the daily chart, it's over here, really. I think just through that level there. See it? That sort of resistance on the daily chart. If we go over to the left. Poked above, we're just above this tail here where we reversed. Now, in terms of the really big level of resistance, I haven't put it up, but you can look at it yourselves. It's on the weekly chart. It's up at the 74 level. So my view is, you can wait for the ADX turn down, but we like to kind of anticipate where it might come, or come in a bit early. I personally think any big red candle this size will turn the ADX down. That's just from my experience, okay? But yeah, this one I've already got a small position in, actually. I want to add. Now, what I'd do is I would sell into this spike here on any signs of momentum turning down or weakness, with a stop back well from the 74 number. If you want it to be early, come in through 73. So this tail here, I'd come in through, just get the round number cleared. I think that's about 73.70, okay? And I think, yeah, if we did have a red candle through here, the ADX would turn down. Yeah, it's up to you if you want to wait for it to turn down or anticipate it turning down. I just like to anticipate it. Now, I know roughly how the ADX moves, which is just due to the equation that it is. But you can actually, if you don't have experience of it, you can wait for the turn down. Now, in terms of where could we go? Well, this was a nice strong move down. And you did have, COT divergence on that peak as well. You got a bigger COT divergence on this peak. Now, the obvious level of support is probably going to be there, isn't it? At 72. You've got plenty of support on those bodies and tails. But, yeah, my experience of the COT, when the positions are so extreme, that is not going to hold. We are going to target at least this level, in my view. So down towards 70.50. You can see why I've picked out that level. Obviously here, a bit of resistance, holds it and pushes off it, tries to come back to it, pushes off it, and then up. So that's the minimum target. But we're a little bit more bearish. Our reading of the fundamentals. Yeah, if we do break down, backed up by the COT as well, we see a bigger move. We think we'll go to at least the level that the last ADX turn down gave, which is 69, probably 68.50 to be honest with you. But if we got down towards 69, that's a lot of pips, okay? Obviously you've got to watch the trade as it progresses. And I'm going to stick this one in the member center and track it, okay? But we are getting ready for a turn down. I think it's going to come. If we move higher, it's just going to blow off. If we turn down lower, we're going to follow through to the downside, and this ADX is going to turn down and back us up. So that's my view of NZD USD. Let's move to the next chart. Using dollar Japanese yen, and this pair really interests me at the moment. It is a nice strong uptrend for sure, but the CFTC net traders are warning of a big break to the downside. Now, check out non-commercials 4.9 to 1 in terms of longs over shorts, so very bullish. Commercials 8.1 to 1 in terms of shorts over longs, so extremely bearish now. Divergence between the two groups 13. That's the biggest of any FX pair this week. And over the last week, this divergence has really increased. It was only half of this last week, or I think maybe even slightly less than half. So the commercials now are selling hard. Non-commercials are very bullish. Now, what I also quite like about this trend is the way it evolves. So you have a little bit of a bottom there. Well, you have a bottom there, come through the 20. It's kind of a gentle move up. Okay, so the trajectory is fairly gentle. Then after this candle tail bottom, it gets very aggressive. So yeah, the slope becomes more steep. Okay, and that normally happens when you get sentiment really bullish for a pair in an uptrend. And yeah, we've got the Kiwi up now 82.50. Nice blue candle, strong blue candle on Friday. And you have got a little bit of resistance at 82.50. So there. Okay, so that would be your first level of resistance. Okay, now in terms of if we break this level, okay, I think this would be the level to sell into, 83. It's a round number as well. So round numbers, as we said before, always very significant for traders. So if she comes up here, ideally, if she did come up, I'd like her to jump 83 so I could sell her back through the round number. But up at 83, I think, you could be looking for a turning point. Then got the line in the sand kind of there on the daily chart. And the stop would have to be back well from that level. So up to here, just look for signs of weakness. Seller, stop well back, say something like 83.80. Now let's say she doesn't rally up. Where would you want to sell her? Well, you're at 82.50, strong blue candle. You really want to come through the round number in my view. So you can see these two bodies here. Okay. Certainly want to see those bodies cleared out. Probably want to come through 81.70, I think, below this blue candle here, or the tail of the candle. Okay, so let her come down. Now, when she does start to move down, basically what is going to happen is, non-commercial speculators are going to get hit on stop. Now, because the positions are so extreme, okay, I'd be looking for a really good move to the downside. First level of support is obviously, from a pure charting perspective, is going to be there. You also got 20-day moving average. Because positions are so extreme, I don't see that holding. I think we're probably actually going to go at least down to 79. Okay. So where we broke up through there, found some support. So we should at least come down to here. So decent downside potential. If she does come through here, where would you put your stop? You want to be back obviously well from this tail here, probably about 82.80, I think. From our fundamental reading of the chart, it's not fundamental reading of the chart, from our reading of the fundamentals, I think we should probably go down lower than 79. I think we'll probably go down to about 77, but just want to see if she gets down here. Now, I just highlighted the momentum here. And in terms of, we've got no ADX here, I'm just using a stochastic and an RSI. I tend to find, a stochastic and RSI, you can't use them in the traditional way. And when you've got volatility low, and volatility is low, obviously the stochastic chops, but just like when I get D and a K line above 90, you've got 97, 93, just showing how overstretched the momentum is, and that it's a bit like a rubber band, it will snap back. Okay, also the RSA, we're a bullish chart extreme at 80. It doesn't very often get to 80. Can't see another move above even 70 on this chart, so it's a really extended trend, and in our view we're going to have a nice big break to the downside. So it's a sell on a pop higher or on a break of support. Obviously this chart will evolve next week. I'll update it in the member centre as well, or if anyone's got any queries on it, please feel free to email me. Right, let's go to the next chart. Right, we're on the last chart, which is USD JPY. And I'm really liking the look of the JPY across the board, just due to its personality, which I'll discuss in a moment. But first of all, CFTC net traders. Non-commercial 2.61 in terms of bullish bets over bearish. Added bullish positions of 11,393 this week. Commercials 3.0 to 1 in terms of bearish bets over bullish, and they added bearish positions of nearly 14,000. Divergence or ratio between groups 5.6, which isn't a big divergence, but it was almost even last week. So what we're seeing now is the divergence increase, and basically the groups start to add to their positions. That's the CFTC candle here. So just as we come up to 112, that is where the positions really start to accelerate. Now, this trend looks kind of laboured to me, and if you look at it, we get this break up here. The dollar was a bit oversold. We held support, a little bit of sideways, and that move up, then sideways, with this candle attempting 113 and failing to take it out. Now, from our perspective, yeah, the yen's just due a rally. Commercials are just getting more bullish of the yen across the board. Stock markets, they're looking a bit weak. Yeah, if they go down, which I think is likely, then that's going to firm the yen as well. So I think this looks a pretty good risk to reward trade. And yeah, if you take where, sorry, I've got a blue line rather than a black line. Those three candles intersect. Let me change that to black. Okay, so over here, sorry if I just draw that line across a little bit more. There we go. Okay, so that bottom, is big red, okay? This poker's been up to try and test it. Might see a test of the 113 here. I just got a feeling it's just going to run out of steam. And, my own view is if you would do that, okay, yeah, we've held these two blue candles. Just think, if we sell through here, get through that tail, say 111.80, we should go down, okay? Now I'm really targeting, this level here, so down to 109, so it's about 300 pips, okay? Now, come through, I just don't think the 20-day moving average will hold her. I just think she'll run to the bottom of the channel. If she pops up towards the 113 level, just look for any signs of weakness at all. Ideally, I'd like it to go through 113, so just sell it back through the round number, let's say 112.80, and then I'd stick my stop back behind these candles here. So you got really 4 candles. You can see the bodies, and I think they'll provide good resistance. So really on a pop higher, up above 113 or towards 113, I think she's a sell with the stop behind 114. She breaks below the tail of Friday, I think she's a sell with a stop at say 113.50. I then look for a move down to 109. I just don't see a huge amount of upside for the dollar from here. So best to see either a decisive break low or catch up into that 113. Now, don't sell her around where she is now. She's kind of in no man's land. I'm doing this really on price action, just to CFTC net traders. Those positions will be more extreme now. They're 5.6. I won't be surprised if they're up at 8 or 10 to 1 after Tuesday's action above 112. Just feel the commercials are coming and sell heavily. In terms of momentum, not really telling us much. Stochastic overbought, RSI's flat. I just have a feeling, stock market weakness, look for it next week, get it. Then USD is going down. We shall see. That's that's my view of today's charts. I'll come back off that short review there of those Forex pairs, obviously. That is my view right now. It can obviously change in line with the market conditions. If you want our full Forex trading techniques and our daily technical analysis of major Forex pairs for a life membership, you can just simply click on the link beneath this video. Now, a lot of people write to me and say, appreciate that you are really definitive in terms of the view that you take, and you actually do give, entry levels, stop levels, target levels, and a lot of people have also said, aren't you frightened of getting it wrong and looking a bit stupid? The answer is no. We fully believe in the COT. Sure, we are going to get trades wrong. That's just the way trading is. But over the longer term, COT gives us an edge. It's based on, like I said, timeless logic. It'll always work. If you look at our COT playlist, basically on the trades taken, we're well up. Okay, that's what we want. Obviously, there's losing trades in there as well. I think a lot of people who do analysis online, I don't think most of them are traders at all. If you can't give a view and be fairly definitive about what you're going to do in advance, then you can't have much confidence in your method. And like I've said in lots of my videos, all this complicated pattern trading. No, I just don't believe those people who teach it trade at all. It's no soundly based logic there. COT is soundly based. We know markets are going to get too bullish in terms of sentiment, too bearish in terms of sentiment. Prices are going to run on too far. The commercials are going to tell you when a turning point is near. Of course, they're not losing any money, so prices can always overshoot. But if we trade, with our technicals, good money management, we can get the odds on our side, and longer term we can win. Now, in terms of the COT, personally, I just consider an essential part of my trading strategy. I'm not saying the way we trade is the only way to make money or anything like that, because there's plenty of different ways of making money. But I think the COT really is a fantastic tool for traders who want to gain an edge and keep their technical analysis simple. Once you get used to reading the COT, you get used to the divergences of the groups, how fast they change, how big a divergence is important in different pairs, etc. Just a little bit of practice, then you'll master the COT, and simple technical analysis. You will then have an edge and can win longer term. The other great thing about doing COT trading is you can project fairly ambitious price targets and just take position trades, i.e. you can just set your levels in advance and see if they're triggered. You have to sit around and watch prices all the time. Once a day is enough. Now, we shall see how those pairs turn out in future videos. I'll also do my normal weekly forecast tomorrow, rounding up the fundamentals and the big technical levels to look out for. If you ever have any questions or queries, of course, please feel free to contact me. Thanks again for watching my video.